Hi everyone, it's Sid here from Fundamental Research. Our guest today is Art Halleran, CEO of Trillion Energy. We initiated coverage on Trillion last December and its shares are up 200% since then. Trillion is an oil and gas producer in Turkey. They are developing a large gas play with the country's largest producer and state-owned company. Trillion recently entered into LOI for a $17.5 million financing to commence its development program. So the agenda for today is I will kick off the call with our thoughts on the energy sector and why certain countries such as Turkey offers an attractive opportunity. And Art will take over from there and introduce us to his company and highlight his development plans. For listeners, you can either wait till the end to ask questions, or if you have questions during the presentation, feel free to type them in and we'll try to respond to them. We encourage questions to be directed to Trillion since we have Art on the call today. Here are some key disclaimers. Please take a moment. Okay, so let's get started. With the rollout of vaccines, we're expecting a strong economic recovery in the second half of 2021. 13 of the top 15 hardest hit nations by COVID have reported flat or weekly declines in new COVID cases 4 weeks in a row. And in Canada, 62% of population has received at least one dose of vaccine. The UK is at 60% and the US is at 52%. We expect all developed economies to significantly reduce restrictions in the next 2-3 months and an economic recovery in the second half of this year. According to the IMF, the global GDP growth is expected to be 6% this year versus negative 3.3% last year. Strong GDP growth is expected across the board in all the regions as shown in this chart here. As demand for energy is directly correlated to GDP growth, we have a positive outlook on the energy sector. You can see oil price forecast here. 2021 expected price is 50% higher than 2020 levels, and the consensus forecasts show prices will remain at about $60 a barrel in the near future. Let's look at gas prices next. Natural gas prices in North America are expected to be 29% higher this year, and prices are expected to stay about at $2.75 per million BTU going forward, which is significantly lower than their historical average. So let's look at international gas prices. As shown here, there's a huge discrepancy between European and North American prices due to supply constraints in Europe. Gas prices in Europe are more than double that of North America and are expected to be in the $6 to $7 range. However, operating costs in Europe and North America are relatively comparable. This means that margins of gas projects in Europe are significantly higher than North American projects. So with energy demand and natural gas prices to pick up in Europe, we believe one of the most attractive markets in Europe is Turkey, which is where Trillion is focused on. Let's take a quick look at Turkey's fundamentals. To start with, 99% of Turkey's consumption is met by imports. And this is why. Domestic gas production is down 37% in the last decade. However, demand was up 28% in the last decade. Turkey is ranked 16th in the world for gas consumption, and gas there is primarily used for electricity. So based on their current consumption and production figures, we estimate that Turkey imports 99% of its consumption, and imports come from countries such as Russia, Iran, Azerbaijan. And due to the significant reliance on imports, the Turkish government has a strong incentive to increase domestic production. TCF Partner is a state-owned oil and gas company, and they're also the country's largest producer. And I should note here that government support is very critical, or is a very critical piece for all resource projects. With that, I would like to welcome Art, CEO of Trillion Energy. Art, you'll be able to share your screen in a second.
Yeah, so I'm Arthur Halleran, the CEO of Trillion energy, and we're a gas producer in Turkey. And this picture you can see is one of our platforms in the Black Sea. So our major gas production is in the Black Sea. So we also have an oil field in Turkey. So we're a 49% owner of a 600 million gas asset called SESB, which is offshore Turkey in the Black Sea, and TPAO is our 51% partner. To date, we produced about $355 million worth of gas from 4 pools, and now we have some large gas adds. We have 4 discovered unproduced gas pools and 6 low-risk development gas pools that we're going to be bringing on. We have an LOI for financing for $17.5 million to facilitate this new production. And also from this drilling, we'll generate some cash flow, which we'll reinvest into new wells. And like Sid was saying, we're in the $6 to $7 range for the gas. And the game changer was that the Turkish TPAO found some big discoveries north of us. Tuna 1, which is about 14 TCF, and just in June, a new discovery of about 5 TCF. So our natural gas field sits off the shore of Turkey, and north is Tuna, where the big discoveries are. We have 4 producing platforms. We're going to add additional wells, which we'll drill from the platforms. So we'll have production almost instantaneously. We have 2 third-party engineering reports for a low-case scenario. And for the reserves of the discovered, tested, but not produced pools, we have an NPV10 of about 62 million US. Just that will give us 1.2 to 1.8 million cash flow per month US after costs. There's also 6 low-risk development locations with the NPV of 83 million for a total of 144. Plus, we have 14 additional exploration locations. This just shows you the 4 offshore platforms, the gathering system, and the onshore facility. There's a little more detail. This is the exact field. So we have 4 producing gas pools, 4 discovered non-producing gas pools, and 6 development gas pools. The red stars are the ones that we've already produced. The yellow stars are our 2021, 2022 discovered but not produced gas fields. And the production or the drilling will consist of 2 rigs because the larger rig is not available for deeper water until March 22, and we didn't want to wait. So we'll spud October 21st, drill until January 22nd, which will be 2 wells and a recompletion. We'll get gas flow immediately and cash flow, which we'll use for future development. And in March to June 2022, we'll do the other 3 wells. We'll continue drilling. The yellow are the development locations and some infill locations for 2022, 2023. This just shows you the spud date next year, October 22nd, carrying right down to September. This is our annual gas production. So if we get this stacked correctly, we'll be double our 1.4 to 1.8 because we'll have twice as many wells producing. And we'll get some very good cash flow. There's also stratigraphic exploration traps, which are not included in our drilling program at this time. We have to review the seismic, which we're doing that now. This just gives you an idea of the share value to show you that we're undervalued. So we started getting the story out end of February. We had a fairly good price, And now we're down to about 30 cents, which is still not bad from what it was before. And then fundamental did a comparison and give us about 58 cents, which is about 50 cents US. Our market cap is 38 million from 10 million, but still is quite undervalued. And this graph here shows you potential share value at the bottom and the three scenarios of only the stuff that occurs on the block. So the GLJ as is report gives us 144 million NPV 10. That's our interest. Upsize it to 3P, it's 269. Management estimate, we took exactly GLJ's report, but gave it the 80% recovery, which we know it exists, and also removed a 10% risk for funding. And for the low case, it's 214 million. Upsize to 3P is 367. And then when you add the expiration, which I showed you, we go from about 452 million to about 836 million NPV 10. And that gives us a share value of low case 0.9 to $1.75. Our estimate $1.40 to $2.40, and you add expiration, you're up to $3 to $5 per share, and that's just the stuff that occurs on the block. We have expiration potential. Here's our block. There's the tuna and the other discovery. Here's our block again. The red was all the land we had at one time. So we have all the data, all of this area map and prospects. Just at that time, it was thought that there wasn't enough gas generated, but with the new discoveries, we know there is. So some quick examples. There's the field that we produce from. You can see how small it is. Go along the seismic line. Here's a 9-kilometer structure that's undrilled. Another one, 4-kilometer structure. And then further out into the basin from our field, we have a 35-kilometer structure that you have some structural traps and on-lapping stratigraphic that can be quite charged with gas. For the conclusion then, paid for infrastructure with 100 BCF of low-risk gas that can be developed. A $250 million value, basically before everything on the low case scenario, an LOI of 17.5 million financing to develop. Shares are extremely undervalued. Medium evaluation gives us about $1.40 to $2.40. And if you add all the value on the block, you're looking at between $3 to $5 a share. And the future exploration targets not included. And the last thing is just, we also have an oil field, which we will generate $3 million potentially for this year. And that's my presentation.
Thank you so much, Art. We can now open the call to a Q&A. Listeners, if you have any questions, please feel free to type them in, or you can click on the raise hand option and I can unmute you. So we have received a bunch of questions, Art, but before that, do you mind taking everyone through your current development plans in terms of use of funds for the $17.5 million? How many wells you're going to drill? Maybe some economics on that. That would be great.
Yep, that will give us our first program there of about five new drills and 2 workovers. And the reason why it's 5 new drills and 2 workovers is because we will generate cash almost instantly when we drill a well, because we're drilling from the platform, and the drill pipe actually will act as our pipeline. And so we'll be able to reinvest that. And because we'll be getting 1.5, well, 1.4 to 1.8 free cash flow after everything per month, we'll pay that off very, very fast.
What is the probability of success for each well?
So for the for four of the prospects, they have been drilled, they have been tested, they have been mapped, and it's 100% sure. Then we have some prospects because they have not actually been drilled or tested, even though they are part of the same pool, but they're fault blocked off. We have a between 50 to 90, predominantly around 60 to 90% possibility of success.
I think one point I would like to add here is this project is a capital intensive project, but the probability of success is extremely high compared to typical oil and gas projects, which offsets some of the risks involved in the development side of things. Next question is, any update on the financing? Have you received the funds yet? What's the status?
So the status, I call it COVID time. So we are waiting on documents coming from the Turkish government. And just a short while ago, they had basically a complete shutdown. They're easing some of the restrictions now. And so we're just waiting for some papers coming from the government.
Are you able to give any information on the lender or the financier at all?
No, we cannot.
What's the potential production? These are a bunch of questions on the economics. So I'm just going to summarize this. Basically, this gentleman wants to know what's the average production and net back of each well that'll come online.
Yeah, that's actually a very good question. So the wells, they test at about 10 million cubic feet per day, but because of the type of reservoir and we want to have production, we'll cut each well back to about 2.5 to 2 million cubic feet per day. But that's still pretty good when you look at the price we get for the gas. And so when you have 4 or 5 of those wells, you're now up to 10, 12, even 25 million cubic feet per day. And that's why we'll produce so much per year.
Just to give some perspective on that, 2 million cubic feet per day is actually, it works out to about 4 million plus per well in revenue. So then you can just do the math there. If you're doing 4 or 5 wells, you're looking at anywhere between 15 and 20 million revenue. Is that correct, Art?
Yeah, so again, like because we're producing all the gas wells for the first project or the first 5 wells, we will make after cost and everything about 1.4 to 1.8. The reason why we vary it is just taking some price variation for that. So if we have the other wells on, we'll double that. So we can be up to about 4 million after costs US per month net us, right?
Okay. Do you have plans to work on your other projects?
Yeah. Right now, we're doing some work on it, but I need to really focus around SASB, and in light of the new discoveries by TPAO of the very large structures that are so totally charged with gas, the best impact for the dollar, the lowest risk for large deposits will be now around our field, right? And because we have gas there, we know the structures there, we have gas further out. And so basically I'm answering 80% of my time now is going to be looking for the big hitters around SCSB and also bringing on the gas that we already know exists there.
That brings us to the question, do you have plans to bring a JV partner for your other projects?
We're always open to that, yes.
Okay. This is a long question, but I'm going to summarize this. Basically, what the question is, with this new discovery in Turkey, your partner development plans for that, would you be able to use that infrastructure for your projects? I think the question is there any overlap in the development plans?
Yeah, so the question is, our existing facility, can we use that for anything that we find?
Or the new discovery found in Turkey by the, yes,
By TPAO.
yes.
That is something we're looking at, yeah. Right now, they are going to landfall about 80 kilometers, but we have our facility, which is rated for 75 million cubic feet per day. For $1.6 million, we can double that to 150 million cubic feet per day. And I think with some work, it could probably be up to 200 to 250. So it could potentially be a alternative to get early gas processed and into the market for Turkey.
Okay. Next one, please talk a bit more about these large exploration structures, 4 kilometer by 35 kilometers.
Okay, so I've taken the location, any indication where it's located, because I want to keep that under my hat. But because we have a 20-year history, there's the previous existing company before us, but we still have the same personnel. We owned a lot of data, and we have a lot of mapping and projects and reports and seismic lines. So we have all these structures defined, and we've had areas where there's a high likelihood of having reservoirs, all that kind of stuff. The big question was always, there's not enough gas. And the conversation before was, because you always have naysayers, there wasn't enough gas to generate, to fill the structures. So even though you have the trap and a reservoir, there's no gas to migrate into it. Well, with the new discoveries have proved that wrong.
Okay, next one. Does the oil project have exploration upside?
The which project, sorry?
The oil project.
Oh, the derrick. So what happened with the derrick is that we are waiting for confirmation from the government again to see if it's extended by COVID, because we have not heard. And I mentioned that in other interviews. And that's for the large oil play. For the oil play I mentioned here, Cendere, we're a 19% owner in it. And if I come up with an idea of how to do some upsize, I would make sure I want to make other similar fields that I secure some kind of interest before doing all the work and proving it up, but not getting the big return for it.
Okay, just one more question. Ideally, when will you start drilling? I guess the thing they're looking for is when will production, or when can you start work?
So if we can start drilling in October this year, and that's the goal. And again, part of that is related to COVID. So what I mean by that is, if we're going to start the whole program, we will then order all the pipe, everything and we'd have to go to the manufacturer for some of the stuff. And there's a lead time. The lead time normally would be like 4 months. It's now 6 months due to COVID. But we've been looking at an alternative. So we have the program split in two. So the first one is just 2 wells and 1 recompletion. So there might be enough consumables already stacked in yards and so on that we can purchase that on a one-off and not have to wait for potentially like 6 months, but only have a 4-month lead time.
So when operations can start later in the year, or say October, when will revenue kick in? Right away, or maybe Q1 next year?
No, so what happens is that the difference that we're doing than what was thought before, and this is because of the new advancements from the North Sea and stuff like that, is that we're actually attaching the rig onto our platform. So it goes up there, and the rig has a part that moves over. So we're drilling the location right from our offshore platform. And so the drill pipe will go out and tag the pool that we know exists. Then we'll complete the drill pipe and just produce right up the borehole. So they're right to the platform. So there's no subsea tie-ins, there's no subsea completions. It's all in the platform. We have 4 platforms, and all those platforms are connected to the gathering system, which is connected to the facility, which is connected to the market. So it's a matter of a couple of weeks of after drilling a well, we can turn the tap on.
Okay.
And
We
it's
got
45, sorry, it's 45 days that we get paid for gas that we deliver.
45 days. Okay. So I think we got one more question. It's currency related. In what currency will Trillion be paid when it sells natural gas back to Turkey? The lira has been in free fall relative to other currencies.
Yeah, so this gets a little complicated, but the pricing is set in US dollars and we get paid in US dollars. But in between there, because it's a domestic production, the US dollars per MCF is converted to Turkish lira. And so what happens is that it's a bit of a drag sometimes. So when the Turkish lira devaluates, the amount we get per US per MCF goes down, but the government always gives a correction. So right now, because of COVID, they're giving a 1 to 2% month correction. And the long-term price forecast is always above $6 because that is the price they have to pay for the gas they import because they get predominantly mostly from Russia. And so the internal price is based on that. And because we're only a small, tiny little fly on this huge elephant's back that's bringing the gas in, the correction is not made for us, it's made for everybody. And it has to be done or the government spends too much US currency to make up the difference.
But technically, when lira drops, Trillion benefits, right? Because you get paid in US dollars, and the operating costs and everything is in Turkish lira.
That's correct. Yep.
So the currency actually, the movements or the weakening of lira actually helps Trillion on the long run.
All I know is that the worst case scenario we had was in COVID, and that was last year, and that was because everything crashed. But it never really hurt us that much price-wise. We went down to, I think it was like $5, right? But then we went up fairly quick again.
Fantastic. This is great. So I don't see any more questions. Did you have any final thoughts before we wrap this up?
Nope.
Okay. Thank you so much for taking time today and sharing us your plans for Trillion. And then thank you so much everyone for taking time today to attend this call. A recording will be uploaded on our YouTube channel shortly. Please ensure you subscribe to our YouTube channel and also sign up to a member of our platform, researchfrc.com. You get alerts when we publish new reports. And of course, you'll be able to see our list of top picks. Thanks again, everyone, and wish you all the best and stay safe.
Thank you very much.